Howdy, everyone. This is Socrates with the Hyperwave YouTube channel, and I am looking like I will be flying solo again today. I did email Tyler a link, hoping that he can join, but I haven't heard back yet. So as it stands, looks like it'll be just me, but maybe he will surprise us again like he did yesterday and get to share some timely insight. So the markets sure are moving. There is plenty to talk about. So without any further ado, why don't we just jump right into some charts? Sharing my screen now. And of course, we're going to be starting with Bitcoin. So let's see what we got here. Some carnage. I want to start by redrawing some trend lines. See if we can make any sense out of what is going. Then we can look to add some moving averages. Okay, so we have been keeping our eye on this hyperwave fractal that has been occurring on the 4-hour time frame. Yesterday, I had this phase 4 drawn and mentioned that a 4-hour close below would be a signal for me to exit. I'm not sure exactly how I had it drawn yesterday, but it would have been something along these lines. And it sure turned out that this would have been a great spot to go ahead and take full profit, which is kind of what I was thinking. I did not do that, though, primarily because of this wick right here. To me, this was very strong and made me think that there could be some gas left in the tank for another leg up. And it also got so close to closing above my line. I mean, it was right there that it made me wonder, maybe I should adjust this thing such that it's still in there, because it was so close to how I had it originally drawn. I was really not convinced that this had broken down. I wanted to see what happened after we closed this wick, which was bigger than the body, making this a bullish candle in my mind. It could be viewed as a massive hanging man, but for me, I want to see the body a lot smaller, and I wouldn't want to see the wick this big. I'd want to see it like inside of this candle. Seeing a huge wick like this is a very important sign to me, especially being that it came right off of my phase 3 trend line that I had drawn. So everything was at this point looking like there was a very decent chance in another leg up. Pretty much every time we've gotten a big move up, it has followed a massive wick. I shouldn't say every time, but basically throughout this year, anytime we've gotten a big wick like this, it has generally led to more upside, especially if it was following a significant sell-off. So I was really kind of thinking that we might be in a situation like this, where we do have prolonged consolidation. I did think that that was a very realistic outcome. Would be like another just month long of sideways, something like this. So when I saw this 4-hour candle yesterday, I was really kind of feeling very similar to this situation and wanting to see another rally for like maybe a week or so, and then kind of fit into a consolidation range. So it definitely turns out that I was incorrect on that. So let's take a look at what other indicators we might have been able to use. And the 9 EMA on the 4-hour chart is very important to me. As long as we are wicking off of it and staying above it, I am feeling confident that there's more upside. And that looks like it was what happened again on that following candle. Wicked off of it, stayed firmly above it. So throughout these next two candles, the following candle after this one, I was still feeling pretty darn good, especially seeing this huge spike take us all the way back up to the high 12,000s. At that point, I am feeling pretty good about holding on to all of my position, despite now this trend line was clearly broken down. What I was thinking was that I probably drew that a little preemptively, and potentially this is still just phase three. Remember, I'm looking at it basically like this. So often it will look like a phase four move, but it will only be a continuation of phase three. Like maybe this isn't the best example back in here, but there will be plenty of times where here's maybe a better example. That here we're in phase two, and it looks like we're starting to take off at a higher angle. Like right here, this looks like a pretty valid trend line as far as I'm concerned. And you might have wanted to draw that in and label it phase three, but it would have been kind of preemptive after you would have realized it broke that down, found support phase two, and that isn't really a phase three move in relation to what we would expect. So often you will think that the next phase is coming, but really it's just an extension of the current phase. So when we got this wick and this candle here, now I'm kind of thinking like, man, this looks like potentially we haven't even started the fourth phase yet. And I was seeing so little resistance above 14,000 that I'm thinking this sell-off and this spike off of this phase three, that could be what actually propels us into phase four, which would kind of, like I was thinking, take us to retest prior all-time highs. These are things that I was thinking in my mind, not sharing publicly. But that is essentially why at this candle, I still decided to remain in all of my exposure. And then we see that it continued down, and on the very next candle, it closed below the 9 EMA and rolled that over. So at that point, I was actually not awake, I don't think. So we're going to take a look at the 15-minute chart. When the markets are moving fast, I like to zoom in. They're really, when the markets are really moving, you can't tell much by watching 4-hour candles or daily candles. So I really like to zoom in and use the same approach. And that's kind of what I did here yesterday. When this big sell-off was coming, zoomed into the 15-minute and said, man, this is a buying opportunity. This is not a selling opportunity. I don't want to be selling this. I want to wait and see if we potentially get a death cross from these moving averages, or if we get another sharp correction that finds support at the 200 EMA and then takes off again. So this is what I was watching closely, really more than anything else, was this 15-minute chart. And I was really liking what I was seeing, kind of in line with the 4-hour chart, in the sense that we bounced off of the 200. We got this nice sort of, I'd call it kind of like an Adam and Eve, especially on a lower time frame. You can see it here. We have this sharp spike down, and then the sharp V sort of back up, and then a kind of a rounded sort of action after that, which had higher lows. So this, I think there's actually a better term for this sort of pattern that I think I've seen Peter Brandt, he labeled it on gold, like right at the bottom of that move in 2018, something very similar to this. So I don't think this is technically what would be referred to as an inverse, an Adam and Eve. But I do think that there is a better term for when you get this real quick rebound like this, and then a drop off like this. And you know what the heck, why don't we just go ahead and pull up a gold chart, because I remember that vividly, and it was a very good signal. So right here, it was this kind of V down. So it's, it's not really an Adam and Eve in the sense that, you've got the V, but you don't really have the, and then it's followed by a higher low. So it's not really an Adam and Eve, but it's kind of the same purpose. I wish I knew the name for it. Maybe somebody in chat can let us know. But that's essentially kind of what the same sort of principle. This is something that you'll often see after these sharp sell-offs, is some action like this. And that is very bottoming to me. That looks very strong, like this was support. And then we go ahead and get back above. We did get this death cross, but the price was extended below it. So I'm holding off. Darn it, this is the 5 minute. Sorry. Okay, so back to this, we kind of see that same sort of spike, higher low, and then it takes off and gets above the 50 EMA on the 15 minute and is followed by a bullish cross with that 9. So this right here, I was really feeling pretty good about it. And then this followed where we came back below the 50, but we created a higher low. So right here was real strong. This was right around when that second 4-hour candle was closing that I said I was still bullish on and feeling comfortable holding on to all my exposure, is because the 4-hour chart, as well as this action here off of the 200 EMA, didn't resist here. That's a signal of strength to me. Even though it pulled back below, we got a higher low, another signal of strength to me. Could almost start to, it's super messy, but kind of starting to see a potential for an ascending triangle, something along those lines. No way it could be a bear flag at this point because it's retraced so far into this. So anyways, right about in here, I was feeling pretty darn good and really thinking that we've got like 65% chance of continuing higher and making another explosive move upwards. And unfortunately, I basically had to go to sleep. I mean, it was getting very late in the night for me. It was past midnight. I was really I knew that this is the crucial point right here. This was what it all came down to. We're either going to get another retest of the 200 and then a continued rally, or we could just rally from here. If this area didn't hold right here over the next like 3 or 4 hours, then I was feeling pretty darn certain that we were going to be selling off. So I wished I could have stayed up all night. Sometimes I do, but now I've got a lot other going on. I can't really just focus all of my time and energy on trading. So went to sleep and kind of woke up a little spooked out. Realized I think my subconscious realized what might be going on. So right in here, right about here, I kind of jumped out of bed, rushed to the charts, and just intuitively I kind of get a feel for how long it can take these MAs to cross over. When they've got this big a spread and you've seen this happen 100 times or more, you start to get to the feeling that right in here, this is going to be 6-8 hours away from crossing if it does cross. So anyways, I jumped out of bed and knew that if this had taken off, we're in ship shape, but if it hadn't, then it's time to be getting out. So I woke up and I saw this action like right in here, and I set my stop loss right here, right below these two lows. We had this double bottom, kind of higher low with two wicks that certainly intrigued me and made me think this could be a trap, taking out these lows, which a lot of people would be using for their stop loss. This very much looks like it could be a trap before it continues on higher. If that's the case, it should not take out these lows right here. So I set my stop there. Think I went back to bed and was stopped out shortly thereafter. So definitely gave up a significant portion of the gains from when I was on yesterday, basically salivating at the unrealized profit and saying that I don't want to preemptively exit just because I'm really excited with how much my position is up, but I also don't want to get greedy and hold on for too long. So that is the balance. I think if there's more time in the day, I could have gotten a little better exit. But I can't really be too picky. The best exit I could have gotten would have been somewhere in here if for some reason I didn't really expect this to continue. This would have been a great spot to exit. And let me explain why. I'm never trying to sell up here. If you're trying to sell these tops up here, then you're probably going to have sold like back in here. I mean, anytime you're trying to sell the top, you are always going to be getting out too early. At least I am every single time. So I'm never shooting for selling the tops, just like I'm never shooting for buying the bottoms. I'm waiting for signs of reversal. At the bottom, I'm waiting of signs for reversal to enter. And when there's tops, I'm waiting for signs of reversal to exit. So that's not ever going to get me the exact bottom or the exact top. But it can get really close if you get this first correction just right. So basically, think of an ABC correction, very common. Even if you don't believe in Elliott waves, you will get a big run up, and then you will get correction that looks something like this. And basically, it's just as simple as a lower high. And it's very, very common, and something to be very familiar with and confident in, because the point of, for me, I never want to sell this A. So if I'm in profit, I'm in a long, and I'm really wanting to wait for real signs of a reversal, I first of all, this is a good sign of a reversal, a sharp correction, but you don't want to sell the dip. It's just generally, you don't want to sell this A. You want to try to sell the B. So in this case, if you can sell the B, if you can get good at that, then you're going to be very close to selling the top, because that B will usually get very close to the top. Think about a hyperwave with phase 4, 5, 6, 7. Phase 6 is usually very close to the top of phase 4. So that is what I was thinking about a lot here. This action did look bullish to me and had me thinking that continuation was the most probable, but I was really looking at this like, man, if this is an ABC correction, selling 1300, this kind of area here, this prior area of horizontal resistance, that would be a very logical place for an A, like the B, to get to on an A, B, C correction. So I was very much interested in selling this, kind of viewing it as a B in the ABC, which provides me strong confirmation that this has topped, at least short term. So I really was looking at that in this area. If I didn't have to go to sleep, I'm very confident I would have gotten out in this action here, where we had the higher low. We failed to stay above the 50 EMA and failed to create a higher high. We broke down this trend line. We failed to have a bullish cross with the 9 EMA. The 50 is now rolling over, acting as resistance, taking out this area of support right here. It would have, I can't imagine I would have held through that. You never know until the time comes, but this would have been a very interesting spot to go ahead and sell as well, considering if you thought this was A, B, C, which at this point, that would have become the most likely situation in my mind, since we failed to create a higher high. It's almost like an A, B, B, C inside of an A, B, C. So anyways, that is what I was thinking. And this is a concept that I wanted to talk about. Is very important to me. Like I mentioned yesterday, when you get this sharp, violent action, you don't want to be the person who is emotionally reacting to the market and selling, the bottom basically. Instead, wait for confirmation, wait for a bounce that creates a lower high, wait for lower time frames to give you a death cross with the moving averages, wait for the next trend line to break down. It's not about trying to get the best possible price every time. It is about remaining disciplined every time. And I don't care if I get a worse price down here. My exit was much worse than it could have been, but that's okay, because this is much preferable to me than panic selling this. If I'm panic selling this, that's a problem in my process. And that means I'm going to be doing that all the time. If I am, reacting to the market's volatility and selling after lows and buying after it rises, that is a big, big, big problem. Whereas exiting in profit right here due to sticking to my process, that's not a problem at all. That's just totally fine and legitimate. So that is what I wanted to cover, is that even if you do get a worse price than this here, say that potentially you don't sell the A, but you wait for a lower low below the A, so that this is your exit, like right here. Say that you do that, you're going to get a worse price than selling the A, but it's a million times better process of waiting for further action, because what can happen is you get a double bottom, then it continues to rally. A million things can happen. Just don't, you have a plan that you can stick to when unexpected price action happens, and don't be so worried about getting the best price. Be focused on protecting your capital. If you protect your capital and diligently manage risk, then the wins will take care of themselves. So it doesn't look like Tyler will be joining us today, so I will try to keep this as brief as possible. It's not one of my strong suits. But let's go ahead and see what we can do. So looking at Ethereum, this candle that just closed was something I was paying very close attention to because of this trend line here. Seemed like a pretty logical place for this pullback to find support. Had a bit of a horizontal here. So that was an area that I was hoping would offer support and a close above this trend line. That didn't happen. I did get fully out of this position and wasn't as concerned in regards to this wasn't near as strong. The bounce, I had a much easier time just kind of setting a stop loss. I scaled them down basically from below 315 down to I think about 304. So I just scaled those down. I wasn't as confident in a continuation here. I probably should have been selling up in here. I was too focused on Bitcoin. Maybe a good lesson that if you have too many positions open, it becomes more and more difficult to manage them all as well as you would like. So Ethereum is very interesting in the sense that if it breaks down this area, next area of support would be 270, would be the 200 EMA on the 4-hour chart, and would be this horizontal here. And I just realized that the title of the episode was "Where is this going to find support?" So forgive me, I spent all the time talking about exiting and forgot to take a look at support. So that is what we're going to do right now before moving on to anything else. Similar situation with Bitcoin in the sense that right here we've got some horizontal liquidity and matching up with a trend line. Seeing that ETH broke down its trend line makes me wonder if this will offer support right in here. There is a chance, most definitely, that this is the final point, that this is where it does find support. I don't think that is very probable, and I'm definitely not buying here yet myself, but I do have my finger on the trigger for buying the next sort of areas that I have lined out. So just checking the TD, we're on a 5 and we're testing this TDST level. Price wicked below on the last candle, closed above, almost this full candle is below. If we do close below that, that would be a big sign that we should continue further down. And based on the TD, my next target would be this TDST level at 92.82, which would be right in line with the 200 EMA on the 4-hour chart. So this is the first area where I am really interested in buying. Of course, the price could find support from right here and take off to the moon and never come back further. But that doesn't mean that I'm getting a buy signal right here. So just because it could happen doesn't mean that I'm going to be expecting that with any degree of confidence. Here would be an area where I have some degree of confidence. If we can get back into 4-figure Bitcoin, then there should be a lot of support waiting at the 92.50 area. So that is my first target entry, is going to be this 92.50 area. And that is based on the TDST on the 4-hour and the 200 EMA on the 4-hour. Next areas where I would be interested in buying would be right around where I believe that Tyler is looking at. I don't remember exactly, but yesterday he mentioned this area, I believe, as 75 to about 9,000 as areas where he would be interested in layering bids. I think he might already have them set. Go watch yesterday's episode if you want to know for sure. So I am definitely seeing the same thing. Right there is my first buy target. Second would be right here at the 8,600 level based on this horizontal and this 50-day EMA. Final target would be back in the mid 6s. If we can get back in here, then I'll probably be betting very big. It would be a very high probability entry that if it moved against me, it shouldn't cost a whole lot in relation to how much upside I would expect there to be. So here are my 3 areas of support where I would be interested in buying. Projecting where you think it'll find support is pretty much meaningless to me unless you are actually going to be entering bids and actually buying that area. So that's why I'm really only talking about where I am interested in buying. Like right here is a level of support, but it's not relevant to me because I'm not buying it. So here are the 3 levels. Maybe right here would be a spot at this 7,800 level based on the horizontal and the TDSD being in between spread out EMAs is a good entry for me. I like to wait for it to come all the way back to the 200, but scaling in between them is also a great option. Don't really love buying a this far above the 50-day EMA. Generally, this is where I want price to come back to kind of at a minimum for me to really be very excited about buying. But as we can see, these corrections recently, it's just been moving so hard and fast that it hasn't really been respecting the 50 EMA at all. It's been finding support before that area. So seeing that all the way back through here makes me feel okay about entering here. And again, it all depends on how it gets there. If it moves down in another move like we got yesterday, real sharp and fast to this area, then I'm going to be wanting to buy pretty heavy. Whereas if it just gradually creeps down and is not really even that oversold as it just chips away at support, then this is an area that I might just pass on entirely, especially if the 200 flattens out and isn't acting as support. So there is multiple areas of support waiting below us, and each are very interesting opportunities to me, but that is dependent on how the price gets there. Seeing another violent move downwards, it would be nice. For me, it's important how much we sell off as well as how long that takes. If we sell off 30% in a month, that's much different than if it's 30% in 2 days. If we're selling off 30% in 2 days and we're in a bull market, then that is a dip that I want to be buying heavily. Whereas if we sell off 30% in 30 days, that's way different. So it's price and time. And here are the levels of support where I think that we could end up finding a bottom, and this is where I am interested in buying the dip. This would be mostly spot buys for the most part, and if I would be entering into a leverage position, it would need to be based on a really high confidence sort of setup, something like we saw here or in here, where the risk is very well defined. Right here, the risk is not that well defined. There could be a huge wick down, all that sort of stuff. So these would be spot buys, and that is what I'm looking at there. We looked at ETH very briefly. I am mostly interested in Bitcoin. Alts have really been lagging. There is a very important chart that I want to go over. Probably the most important chart to me right now is this one. Since 2018, so let's just see, like, it's been these year sort of moves. In 2017, this is a BTC.D, which is Bitcoin market cap dominance. So notice in 2017, it had a year, it was the year of the alts. It took market cap dominance from 94% down to 36%. And then it got stuck in this range, has been below 60% basically for all of 2018. But now it looks like 2018 is going to be, or 2018 already happened and was basically kind of a year of consolidation here in between this range. 2019, I think, is going to be the year of the Bitcoin, and 2020, as we are leading into the halving, and people are starting to get an idea of the deflationary supply and how altcoins do not share in that property. And it will be very clear why Bitcoin is a little different than everything else as we are going into the halving. Many were wondering if alts could survive a Bitcoin bear market, and I was wondering that too. It appears that they did. Now the question that in my mind is, can alts survive a Bitcoin halving? And I'm inclined to think that they are going to have a very, very, very hard time doing so. So this chart is super interesting to me. As we have been breaking through resistance here, I have been getting less and less interested in owning alts. I was really bullish on Litecoin leading into the halving, which is a little more than a month away. And I was wanting to be holding, I still do have a significant percentage of my portfolio in spot LTC. that I was intending to hold on to until the weeks leading up to the halving. If we were getting a big rally, that's when I was going to be scaling out of alts and back into BTC. Turns out that I may have I may be wrong in the sense that we are running out of time to get a real rally before this thing halves. If it doesn't happen the next week or two, I'm pretty much going to lose hope, and we'll be at that point really looking at mainly trading and holding Bitcoin. Because if we get a 2019, that's kind of the inverse of 2017, which it's really starting to look like that. We've got this higher high breakthrough of horizontal resistance, higher low, which turned that back into support, and higher high, while major alts are at support and some are even already breaking down. So I mentioned XRP. This is its major area of support at 4,000 sats. It breaking down on this candle here was a hugely important indicator to me, in the sense that it looks like money really is flowing back into BTC and out of alts. And if the market cap dominance is breaking through resistance while alts are breaking down support, that is hugely important to me. So what I'm most interested in right now is looking to long Bitcoin and short alts versus Bitcoin. Giving this a little bit more time, seeing what happens here. If it doesn't, in the next couple days, if we get a weekly close below 4,000 sats, I'm going to be wanting to bet significant on a short here with a target of like 1,250 sats, and then also going long on Bitcoin. And if my Bitcoin goes down, then I would expect this to really go down too. If my Bitcoin goes up, then I'm going to expect it to leave this behind and this to go down too. So really, this is hugely important to me right here, having just created a new higher high following this higher low. 2019, it has been rallying. Bitcoin has been taking back dominance, and it is not out of the question to think that it'll get back to the 90% territory before the end of this year, leading into the Bitcoin halving. So I really want to caution people about holding alts, especially after the Litecoin halving. After that goes through, I don't want any alts in my portfolio, and I want, if anything, for them to be shorted against BTC, because this, I really do think that the alts are going to have a very tough time surviving a Bitcoin halving. So that is basically everything that I wanted to cover today. I kept it fairly brief, so kudos to me for that. And just to finish the stream, I will show the chart of where I think Bitcoin could find support, and more importantly, where I would actually be interested in buying. So thank you everybody very much for tuning in. This has been a pleasure to share some charts with you all. I love technical analysis and love Bitcoin, so this is one of the favorite parts of my day, and I appreciate everybody for tuning in. We will plan on catching up with you tomorrow.